Happy Thursday, traders. It is 8:01 a.m. Chicago time on the 25th of June 2020. This is episode number 1784. Thanks for joining me yet again. Some of you here have been attending the Trader Bite since day one about 6 or 7 years ago. And you're still here. It's quite amazing. I really appreciate your return and loyalty and company actually in this market. One of the biggest things I want to point out today is that I do this because I've always and will always believe that the best chance that traders have is together as a team. And so, to me, prop trading, team trading, community trading is always there's an edge in that, in my opinion. And this is why Convergent was created. This is why EdgeClear was created. This is why FuturesTrader71.com was created. All these things, all these things were created to bring traders together. So uh, the Friday after non-farm, the Friday after the fourth Friday of the month, I usually ask people to tell us where they're from, where they're hailing from. We'll do that tomorrow. I'll skip it for today, but I just want to thank you, sincerely thank you for attending. These videos get about 2,000 unique views every day, about 12 to 1,300 on YouTube, and about 7 to 900 on Periscope. I just want to send you out a hearty thank you. You notice that the advertisements have been removed. I managed to figure out how to kill that within YouTube. My intent is to get you efficient information and get you moving on with your day, and hopefully have you have the aha moment that I saw many, many times with the traders that I've been around, where they just listen to something long enough and it finally sinks in, and that is the greatest reward to me. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So this morning, what do we have? What we have is a market that is putting risk, that is not putting risk on. It is actually a mixed bag this morning. Although the only products that are positive in my futures quote board that tells me how things are shaping up overnight, those products are safety assets, with the bonds leading the pack with up 21 ticks on the U.S. Treasury bond futures, and the dollar is up 32.5 cents. The Bund is up 60 cents. The Treasury note, the 10-year note, is up 5 big ticks. The pound is up, and remarkably, the DAX is slightly up as well. Gold is off $1.20, trading at $1,773.90. Crude oil is the weakest of the pack, down about 1.29%. August crude, WTI crude, trading at 37.56 on NYMEX, again down 49 cents. The indices are all lower after a selling day yesterday. Now, I'm going to go over yesterday in a minute, but essentially the market has tested lower, which was expected. We expected to do so after a day like yesterday. I'll talk about that, the auction process, and why we anticipate that kind of move overnight, and why we anticipated the kind of move we had yesterday as well. Now, I want to be blunt with the fact that I've said this. Many of you will say, oh, roll your eyes and say, man, this guy's been saying this for years. It is simple to see these things. It is simple to have a reasonably high probability prediction of what the market does. It is not easy to get on it. So trading, the goal with trading is simplicity, but we accept that it's not easy. So being able to predict that the market is going to move away, is likely to move away from balance and result in a trend day given the formation is one thing. Putting the trade on and managing the trade properly is the skill that is actually fleeting. It comes and goes. Some days you can't do anything wrong. Some days you're thinking, what an imbecile after all these years. So if you had one of those kind of feelings this week or today or yesterday or whatever, you're not alone. I'm in that camp as well. Every once in a while, or quite often actually in the action over the last couple of weeks, it's like, what the heck is going? What am I thinking? We're all in this together, and that's my point. So what are we looking at in terms of things that affected market behavior overnight? GFK consumer confidence came in a lot better, helping the DAX, helping buoy the DAX. The DAX is even higher now, up 19 points. It was 5 just a minute ago. That thing can move. GFK consumer confidence in Germany was down 9.6, but the forecast was down 13. Then we got U.S. GDP growth, which came in at -5 in line. Durable goods came in a lot better in the U.S., up 15.8% versus expected 8.5%. 8.5%. We saw a splish splash kind of move off of that. Initial claims came in at 14.8 1.48 million, which is higher, which is worse than 1.38 million. And then what's left for today is we do get ECB's Mersh right at the open, U.S. Open. Fed's Kaplan as well. At 11 Eastern, Fed's Bostic, and at noon, Fed's Mester. And that's where we're headed. Also, we get the Fed stress test results at 4:30 p.m. Eastern, 15 minutes after the close. Isn't that convenient? After the futures close, a half hour after the cash close, we get the results from the big banks. Expect some changes there. And it's really important for those of you who trade the Russell to note that the index is expected to rebalance tomorrow. And I have attended quite a few rebalances in my career. Been doing this almost 20 years, this year. Those can be quite volatile, so pay attention, please. Tomorrow, I think generally they happen in the afternoon near the close. They will take out some stocks and add some stocks, and that's expected given the conditions that we've had lately and all the companies that have gone belly up and so on. So pay attention tomorrow to the Russell rebalance if you're in that product, okay? So that's where we stand. Let's push forward with our review segment. Here's what I talked about yesterday. Please, if you're trying to get an understanding of how volume profiling in the auction works, I really would like you to. It's a bit of a crash course I gave yesterday during the Trader Bite as to how this thing works, and I had emphasized and re-emphasized the fact that we've been in balance for a while. We've been in balance for a while here, and we have built a lot of volume around this 3100. And as you can see here, I anticipated an aggressive move either up or down. I can't tell which. I would be lying if I came in and said, "Oh yeah, I've got special information that says that the market is coiled," and we can see it coiled at the 3100. And it's going to drop. It's definitely going to drop. That's nonsense. That's not how trading works. We prepare for anything. The market can do anything at any point. But what we know, which is important, which is enough, we know that the market is on top of its gapping and is coiling on top of this high volume node. The composite point of control for this period, the micro composite volume point of control, the 3100 figure, and we're opening in a gap, and it's just a very, very coiled area. And I anticipated a drop. Is one of the plans. I anticipated a drop to 3060, and I warned that a drop below 3060 is likely to accelerate selling. The big bullseye target I set out was that 3060. That 3060. Now below 3060, again, expecting it to kind of rush down and bring us into the next, as I mentioned yesterday, it's likely to bring us into the next high volume area. And so pay attention to that. If it does not, if it's unable to sell off and it becomes responsive, then I expect it to push into the prior day's range, and the target then becomes 31.34-ish. The bullseye up here, which did not happen. So scenario one had there was uh, no support for that. Here's what actually happened. I'm going to use it's not the best chart to use right now because of the number of rotations we have. It kind of crunches the bars quite a bit. But what we saw is an open auction out of range, but also something that behaved like an open test drive. Now, the first and most important clue in yesterday's action was the impulse down. And that's what we looked for. This is exactly what we're looking for. So let me pull this back quick. See this? I draw these kind of impulses, these big exaggerated moves. Those are impulses, and those are really important. I'm a statistical volume profile, rotational kind of price action trader with execution on order flow. That's basically where I sit, and that seems like a lot of stuff, but it isn't, because each piece does its own work. And this is the move that I drew with that impulse. I'm looking and waiting for this impulse to come in. Once we get that impulse, then we have an idea of which side is likely to win the fight. Sometimes we'll get an impulse down, a pullback, a higher low, and an impulse the other way. And this brings in the Monty Hall problem, where these guys, the sellers, had a huge opportunity. They could not continue the move, and what that does is it creates an even better opportunity for the other side, because it has shown us that it's not able to get selling after impulsing down. There was just no continuation. There were no laggards in that trade. A laggard would be myself included, who are willing to take the trade on and carry it to its most recent bottom. Generally puts in a higher low and it starts to rotate the other way. And that creates a pretty great opportunity for a long as soon as we see that. We had some interesting characteristics yesterday. We had a double bottom at the IB low. There's a stat associated with this. A double bottom at the IB low has a historical probability. Again, past performance is not necessarily indicative of future results. Has a historical probability of 83% that it would break lower before the end of the session. Before the end of the session, the statistic says that if we have a double bottom that is two bottoms separated by at least 15 minutes, that's what I tested for statistically, that it's likely to take those bottoms out. It doesn't mean it'll flow through. And what happened after that, yesterday was almost a lesson in volume profiling, price action, stats, all those things I talked about kind of happened all at once yesterday. And so what we had yesterday is a two-tick poke through the IB low with a strong rotation up. This is where I issued a warning in the Head Trader channel for Convergent members, and I said, caution, this looks like a failed auction. Be careful, early warning. And what it did is it failed at 3077. Remember this level, 3077? Failed at 3077, and it continued lower. And then from there, it was just looking for a pullback to get on before it could take this kind of flag, a bear flag for the continuation. You just have to sit through really about 20 to 25 minutes, just sit through this nonsense before it broke through. And then we have another zipper forming, another flag, and it broke through, and it's beautiful. Where does it get to? It gets to the 20 figure. Remember I mentioned last week and earlier this week, the market seems to go from 20 to 20 to 20 to 20. 29.20 was big. We had a huge fight there. 28.20 had a big fight. 30.20 had a fight on the way up, and there it is. It's the low of the day, 30.1975, which is basically 30.20 before the bounce. And then from there, the market had its first big. So you can see the rotations down are much bigger than the rotations up, right? Except for this one right here. The rotations up were really unhealthy, whereas the rotations down kept tagging the impulse line, that red line, negative 13 and a half, and then it goes into this consolidation, and then we extend lower. So we expect an additional extension, and there it is, another extension down. And finally, as it tags the 30.20, we finally get our first big rotation higher. We finally get a legitimate rotation up, and then we get the follow through, as we would expect. Impulse follow through. This is how I test for it. I use the rotations to check on it. And then from there, it's just basically the market gets exhausted and we build this acceptance down below, right? The acceptance down below, and we have a very clear dividing line up here. And that clear dividing line results in, yes, you got it, the high of the overnight session. Anyway, I'm going along with this because I want you to understand the basics. Then you can throw on your fibs and your moving averages and your Hull indicators. Those are all great as long as you're an expert or a master of using them. I suspect that they'll make you money. I'll expect they make you money. But first, understand the auction before you layer in all of these lagging indicators and things like that. There's nothing wrong with them, but understand what the market is saying first, so that the lagging indicator can support your decision-making process, which is built on auction principles and gives you that, in my opinion, it gives you the weight you need to hold bigger positions. Okay, understanding the big picture is very, very important. So here's the low volume node, the key low volume node. It is the neckline, the area that was rejected, that is just above or below um, the point of control. So we didn't extend lower, so there's no key LVN at the bottom, but there's a key LVN at the top, and that happens to be the overnight high. Very, very convenient, right? This is an auction that is respecting the day level, short time frame traders in control, point of control beneath us, and we've already tested 3005 with the 3000 century figure just below. There's an MC point of control of 3002, and that becomes a magnet for today. The other thing I want to point out, oh my God, I'm going to run out of time here. The other thing I want to point out, yesterday closed below the one volatility sigma band, which was somewhere in here. It closed below it, giving us what is a legitimately impulsive day. The problem with these impulse days is that they have reversed in this environment. They've reversed the very next day. We expect that it'll pull back, and it did overnight. It'll pull back to some point and then continue lower. I expect the 30-20 to be tested or taken during today's day session, and I'm anticipating that. But one second. But lately, it hasn't been doing that. It sells off like here. It sells off, and then the next day is higher, right? But we did end up continuing the impulse down the next day, but boy, did we do it in a very strange way. Here's an impulse down that immediately gets bought right back up. And it just seems like we haven't been following through. This one, we managed to follow to put in the impulse lower, and then the next day we pushed right back up. We never extended the impulse, but I do expect us to retest this 30-20, and if it doesn't hold, then we are likely to move, which is the overnight low. We're likely to move to 3,000, which is the next high volume node. So we've moved from one high volume node up top to the next high volume node on the composite, which is right here at 30, 37, 36, 35. It's right where we are, so it's kind of the same configuration as yesterday. And the next key area to test is the high volume node just below that. Okay, you need a good data feed to get this quality of data, volume data, but there it is. There you see it. Anyway, that's all I have to say about that. I'm not going to get deeper into this. I'm not going to get into the order flow and all that stuff. I'm going to run out of time today talking about it. Let me pull up the overnight. The overnight very simply indicates a couple things. Really high volume, a lot of participation, completely coiling on top of the composite high volume node, with the market trading on both sides of the mid and VWAP, the overnight VWAP. The point of control VWAP and the mid for the session are tight together. This is another indication that the market is coiling with an attempt higher and an attempt lower, and it's sitting right in the middle. So we have to pay attention very carefully this morning. There are no clear bare lines here except for what was left behind yesterday, which gives us the overnight high, the 3057 area. If we push through, then we are likely to work ourselves back to 3080, 3077, 3080, and so forth. So that's what the overnight is providing. So let's dive right into what's expected for today. I apologize. This is a long one here. I know you want to move on with your stuff, but I think there's some important principles here that I wanted everyone to be aware of. Okay, the goal here is hopefully to make you a better trader. So we're opening in value. This, believe it or not, this value is valid. You can almost break these 2 days apart. This value is valid. The value area extends to 3060 or 61. Remember that number was really important, to 3061 all the way down to basically the low of 3020. That's the value area, and we're opening right in that value area. You can almost separate this day as if it's bounced. So what we have is coiling right here on top of a high volume node, on top of existing balance. And so what we're having here is a market that is again potentially rigged to make a move. So the expectation this morning is for it to be responsive, to come back to yesterday's close, and as long as it does not exceed this 3060 area, remember 3060, big number, just remember this one, okay? As long as it doesn't exceed 3060, my expectation is the bigger impulse is going to be down back at the open, and we are likely to extend below 3020 for a test. Depending on how it treats the composite low volume node, if it bounces back up, then we are looking at 3040, 3037. Again, if it cannot hold the low volume node, then it's likely to, then we get the overnight low test, and it's likely to test this 3000 area and likely to fall through before it starts to bounce again. That is scenario one. I apologize, as it's kind of a wishy-washy scenario, but I'm really paying attention to how it responds to 3060, and I'm paying attention to how it responds to the low volume node at 3010. If it cannot hold 3010, then we're looking at the overnight stat, which is 3005 today, and then we get to the 3000, and we hardly ever get to 3000 and bounce. We push through, we squeeze, and then we may bounce back up, and that's what I drew here. If it bounces off of the 3010 low volume node, then it's likely to come back into balance, yesterday's point of control, and the high volume node here. Okay. The secondary scenario is an early test. Right? Open auction because we're in value. An early test at 3020, a battle at 3020, pokes through, and then impulses up back into balance, and then starts to squeeze into 3060 and potentially coming back. And that completes the mission here. This would be a legit test if we can extend the impulse down and then start to move up. This will tell the buyers, hey, it's a little bit safer to get long strong because we've looked below the low at 30.20 and there was no interest. So now I'm really interested in getting long, right? And that's what the bigger traders are going to look for. And in that case, it's likely to push through 30.60 and bring us back into the 30.77, 30.80 area. Anyway, I apologize. This went on long, but here we are. There's a lot going on, and it's very, very clean, in my opinion, in terms of auctions. We moved away from a big, big balance area that we've been popping around in for 2 weeks now or so, and it brings in some really interesting structures to trade. And it's not just an academic exercise; it's an understanding of what has it done, what is it trying to do, and how good of a job, so we can help determine with a significant probability, hopefully, what it's likely to do next, and that's where our trade comes in. Okay, mind your risk, and mind your risk. Good luck to you. Be a trader, don't be a gambler. Always pay attention to risk, and hopefully you'll decide soon to support us at edgeclear.com, my brokerage. I'll talk to you soon. I'll talk to you tomorrow morning. Take care.